Hi, and welcome back to your weekly market recap. The biggest topic this week is COP26 and what new policies and updates we can expect. The COP, or Conference of Parties, is the United Nations annual climate change conference and is one of the largest international meetings held annually. Representatives met from October the 31st to November the 12th in Glasgow in order to discuss climate change and what work needs to be done to bring us on track to keep global warming temperature increases below 1.5 degrees, as outlined in the Paris Agreement at COP21. Overall consensus was that current climate change action wasn't enough to meet the Paris Agreement target of 1.5 degrees, and that all nations needed to urgently do more. Some key topics during the talks was funding for developing countries, where the previous decade's promise of $100 billion was severely undershot, carbon emission, in particular cutting methane emissions, and of course the contentious topic of coal. COP26 also called for the mobilization of both public and private finance in order to build infrastructure and fund innovation and technology crucial for supporting the climate. Financial priorities are outlined by COP20, including quantity and predictability of climate finance, aka commitment to collectively directing $100 billion towards climate initiatives each year. And a cyclic model also illustrates COP26's vision for how private finance will support public initiatives, beginning with credible climate policies and legislated objectives implemented by countries in line with the Paris Agreement targets, which will create certainty for future investments and funding of innovation. Australia was also present at the conference and announced an official commitment to net zero by 2050. However, 2030 targets have remained unchanged, with a goal of reducing carbon emissions by 26 to 28% below 2005 levels by 2030, which was established in 2015 in Paris. Current modelling for the 2050 net zero target only plans to reduce emissions by 85% based on 2005 levels, with the remaining 15% accounted for by technology not yet existing. This reduction would be majorly through low-emission technologies focusing on carbon capture and storage and green hydrogen, which will also generate new jobs. The plan also predicts a global shift in perspective which will drop the value of coal by 50% by 2050, despite previous comments from the Energy Minister that there would be a great future for coal and gas. Finally, the plan expects significant progress in reducing transport carbon emissions through electric vehicles, forecasting that by 2050, 90% of vehicles will be electric compared to 1% currently. Other developments in Australian policy outside of climate plans also includes changes to workers' compensation, which strikes a hard blow for workers with long COVID or who have dealt with COVID in general. Previous amendments of the Workers' Compensation Act 1987 during the pandemic meant COVID-positive workers were automatically assumed to have caught COVID during work, which made it easier for workers to receive compensation. However, New South Wales Premier Dominic Perrottet has repealed the amendment, which will make it extremely hard for workers with long COVID symptoms to prove they have caught COVID in the workplace. This move is in favour of businesses and insurers, saving these faculties $500,000 and small businesses an estimate of $950. The downfall of the Chinese property market after Evergrande is also affecting Australian iron ore prices, as Chinese demand sees a sharp drop. China is one of our largest purchasers of iron ore, and this drop in demand saw prices going from a $323 per tonne record in May to $123 per tonne in November, netting Australia a $3 billion loss, with experts saying this will likely be the end of the iron ore boom in Australia.